Meantime, the Dow notching a record close today, and traders hopeful about gains ahead with fresh data showing sentiment at its most bullish in 2 years. That's according to a new survey from Charles Schwab. Joining us now is Joe Mazzola, Charles Schwab, head trading and derivatives strategy. It's good to have you on. I want to start right there because we do have, and I realize just barely, but we did eke out a fresh record for the Dow here. Investor sentiment does seem to be strong. Your survey results. What is driving the strong sentiment, and should we see it as a contraindicator?
Sure. Well, I think what Mike Santoli was talking about a couple of segments ago made a lot of sense, right? This idea that there's a wealth effect that's building right now, and I think traders feel good when they see the markets go up. But they're also seeing that rise kind of spread out amongst other sectors. I think that's important. I think the whole concentration risk that we saw, kind of leading the market higher for the first 6 months of the year has started to spread out a little bit. We got the dip beginning of August where we saw that pullback from the deleveraging of a lot of the AI and tech companies. And you've seen some of that money rotate into other sectors. And when you start to see stuff like that, you actually see trader sentiment start to pick up a bit.
Okay, so what does that mean in terms of the results of your survey and where traders are putting money to work across sectors?
Yeah, so still, I think that traders are looking to kind of buy the dip that they saw in that August pullback. A lot of that has moved into the tech and AI space. But if you look at where some of the other gains have been, we've seen it in health services, we've seen it in materials, we've seen other sectors do, utilities and real estate do well also. And like I said, I think the key to that is just looking for other opportunities where there might be some underpriced valuations, and looking for opportunities where you see earnings growth. And I think that's critical because if you look at the earnings that we saw in Q2, we had a beat rate of about 80%. But one thing that really kind of stood out to me is that as you're kind of pricing earnings into the second half of the year, the expectations for sectors outside of tech and communication services is that you're going to start to see more of a pickup, a double-digit earnings growth in those other sectors.
Speaking of tech, going to ask about the positioning you're seeing in the marketplace ahead of NVIDIA earnings tomorrow.
Well, they continue to buy. It's one of our clients' top holdings. It's something that, when you do get the dip, pulled back to $90, we saw a lot of buying in the days that kind of led up to that August 5th, and then the days that followed that. So, that continues to kind of move. Expectations are that you're going to see anywhere between maybe a 10 or 11% up or down move based upon what the options market's pricing right now. And if there's anything, I would say it's bullish sentiment from our clients at this point.